Good afternoon. Today is Thursday and it's February the 1st. The time right now in Singapore is 12:18 in the afternoon. Overnight, we have very volatile market conditions. Obviously, that was the end of the first FOMC meeting for the year 2024. The next one will be in March. And of course, the market moving news was that the Fed decided that they want to keep interest rate unchanged at the current 5.5%, effectively keeping the Fed fund rate between 5.25% to 5.5%. And what's more important is that the Federal Reserve Chairman, during his Q&A questions right after the meeting, also said that there will be no rate cuts in March, which is going to be the next FOMC after last night. We can see that actually disappointed market participants because if you remember, since October of last year until this year, we can see that for the last 3 months, there is only one driver that caused equity markets in the States to continue to record fresh all-time highs. And that has been the prospect of imminent rate cuts. So now the Fed said that there will be no rate cut for yesterday, which is already more or less anticipated. But market was looking forward to the March rate cut. But now that the Fed says that there will be no rate cut as far as March is concerned. So we can see there were wholesale unwinding of long positions. And in the Dow Jones, we can see clearly after the market traded to the all-time high at 38,497.3, that the market sold off. And we can see the market closed on a weak note. And this is not even the worst. Among the worst hit among the major equity index was the Nasdaq, because Nasdaq, if you remember last year, has been very much in play because of tech stocks and AI. So we can see that the a massive overrun in tech stocks is coming back. And of course, the unwinding will be a little bit more severe than, let's say, in the Dow Jones. So the Dow Jones actually did not suffer the worst losses yesterday. In fact, overall losses on a close-on-close basis is less than 1%. So we can see that the market traded at 38,148.74. And this could be the start of a corrective pattern. And I won't say that the bullish trend is over, just that the market has been disappointed that there is no possibility of a rate cut come March. And of course, all these positions that have been bought up since October last year is beginning to look overvalued, and the market is now taking a breather. And near term, I would suspect that going forward into tonight's trading and into tomorrow's FOMC meeting, tomorrow is the non-farm payroll. So that will be another high watermark for the week itself. So if there's going to be a pullback, likely to be the test will be 37,810, which is the entire rise from 37,122.95 to 38,497.39. The 50% mark will be at 37,810. Okay, so watch out for at least a minimum pullback to the 50% mark. If the market do take up 37,123, that will suggest that we probably will see lower prices, and that will open up the November close at 36,000 very much in focus. So depends on how the market closes this week itself. That will actually give us an idea how the market is going to react next week. Okay, in the S&P 500, the pullback is a little bit more severe than the Dow Jones. We can see the S&P 500 traded to a high of 4,931.09, and the market opens with a gap down. So this could be significant technically speaking, because gaps are very rare in cash markets. We have one gap here and one gap here, but this gap here from the very top looks vulnerable to see more wholesale selling going forward. So the market closed at 4,845.66 last night, and it will probably go down a lot more. We focus on the December close at 4,769.82. So look out for how the market reacts as it continues to bleed. Basically, people who have been long needs to cover their position now that the prospect for the rate cut is, at least for the time being, not going to be viable. So all this buying has to be unwind. So let's see how the market reacts going into the balance of this week itself. In the Nasdaq, you can see that the Nasdaq also have a gap down coming from an all-time high of 17,665.26. Now, what is worth noting is that this entire week itself, while the Dow Jones and S&P 500 do register fresh all-time high, the Nasdaq 100 did not. Okay, so that could be already a warning that the market is a little bit leery about taking the tech stocks much higher. And we can see prices close at 17,137.24, and very likely the market will go down further to test the December close at 16,813.76. So any loss and close below this number would actually open up for a challenge of the November close at 15,947.87. So by and large, immediate sentiment seems a little bit damaged, and do be very careful holding on to long positions. And in the Nikkei, we can see Nikkei is still treading water. The market attempted to rally yesterday to 36,370 after the bad performance on Wall Street. We can see prices are coming back down, and it is currently very close to yesterday's closing price, which is the month-end closing price for January. So again, we will have to see, possibly we will see a pullback in a three-wave pattern to see if the market will go back and test the 35,000 levels. Over in the Hang Seng, Hang Seng is doing very well. In fact, considering that the Wall Street closed on a weak note. Now, by and large, this Hang Seng market has been in a very severe bear market the whole of 2023, and the low traded is at 14,796 in the futures contract in the Hang Seng, and then we see a major run-up in prices to 16,313 before it pulled back to yesterday's low of 15,461. Considering the market is very, very firm, despite the sell-off in Wall Street, this basically gives an impetus to the Hang Seng market for a rally. So the look of it does suggest that if we do get a rally beyond 16,313, the market could be targeting somewhere at the 17,000 level, which is a cluster of close from October, November, December. You can see all the monthly close are centering around just above 17,000. So that could act as a magnet for prices to gun for. So I do have a little bit more bullish bias on the Hang Seng right now. Over in the dollar, we can see dollar actually strengthened now that there is no risk of a rate cut. A rate cut will be a negative for dollar. So now, right now, the market actually is getting ready to burst through the 103.64, and I think open up the possibility of a challenge of 104.22 to 104.44. That will be the minimum. If the market can close above 104.44, that will be a different thing, and we will have to reanalyze our upside target. But for now, I think the my target is around 104.22 to 104.44. Okay. Over in the principal currency, we can see that euro dollar has come under pressure. The low traded is 107.95 overnight, and we can see that this is likely to be taken out as the week stretches on for 2 more days before the market closes on Friday. So I think lower end, I think 107 could be opened up for a new challenge. Over in sterling, the sterling does not look like it's going to go anywhere. I'm thinking that it's a little bit of bias to the upside, and I'm still going to maintain the outlook for the time being until something else changes. Unless the market take out 125.96, I think buying is definitely a better choice than selling right now, although the market has not been very, very reactive so far. And over in the Aussie, the Aussie is also flatlining and is coming down, and let's see whether it's going to come down a lot more. If the market breaks 0.6525, then of course the idea of selling into a rebound at 0.66 half to 0.6675 may not pan out. So again, we want to watch how market reacts. Does it if it does break and close below 0.6525, then of course we will have to abandon the idea of a rebound and basically trade on the downside. Now, over in dollar Canadian, because of the overwhelming change in sentiment, now that there is no risk of a rate cut, then of course the dollar bulls were all coming back. Yesterday night, we have a low at 133.59, and this is actually completing a three-wave pullback with a little bit more, and the market closes on a very firm note. You can see that there is a hammer at the bottom of this move here, suggesting that prices likely is going to go higher. So let's see if the market can go beyond 135.42. I'm actually thinking the market can go a lot higher, perhaps even to challenge the 136.20 level. So I am of the view that the next move is likely to be the upside to challenge 136.20. And over dollar yen has also pulled back in a three-way structure, hit a pocket of prices, which is the equality move of this high here at 148.80. All the way to hit 146 even, which is marginally inside this bracket of prices which I've highlighted yesterday. And so right now, market do look like it probably will gun for the upper end. So let's watch how this moves pan out. But by and large, buying dollar seems to be the right thing to do right now. Now, over in precious metal, we can see precious metal continue to trade higher. Now, would that result in the wholesale resumption of the bounce? I personally do not think so. Of course, there is a possibility we can see a three-wave bounce, but again, for now, the market is at a sensitive area because within the internal structure there is a minor three-way bounce, and the market is likely to actually trade to the downside, more to the downside than to the upside in my opinion. But again, if the market do take out $2,088, of course this view will be wrong, and I would have to put up the other alternate view calling for a continued rebound, targeting $2,116 at the minimum. So again, depending on which degree of the move that you see, for a time being, the minute degree suggests that possibly market have already picked out yesterday at $2,056.07 and possibly likely to trade to the downside. Immediate target for this move is of course a challenge of $1,973, and there's a bracket of prices from this low here all the way to the upper end at $1,984.70. So first down, and perhaps even after that a rally. Okay. Over in silver, you can see silver has been a lot firmer, although the market did not do very no, this is not silver. I'm sorry. This is silver. Okay, so silver right now, when we look at it, it is actually quite firm. The market actually bottoms out at $21.91, rally all the way. I think this is a marginal high at $24, if I'm not wrong. There is a marginal high here. Yeah, $23.32 before it pulls back. So by and large, the structure in silver suggests that probably will see higher prices than lower prices. But ideally, I would like to see a pullback into the $22.50 to $22.30 level to see if I can get a better angle to actually buy rather than buy at the current level of just under $23. Okay. Over oil itself has also done a three-wave pullback from a high of $79.25 to the overnight low of $75.50. So basically, if this is a simple pullback, then the market should be getting ready to rally to the upside. Again, we will have to see how this pans out because the higher degree three wave also ended at $79.25. So again, it's a little bit complex right now. Maybe we can get some direction from the higher time frame, which is the daily. Now the daily suggests that we are still in that down move here. So the vulnerability is to the downside if you look at it from the perspective of the daily time frame. But in the 4 hours, we cannot see very clearly as to which way it will go because both scenarios are possible. One of which is that the market has finished its three-wave pullback and getting ready to rally, and the other one is that the market has finished its three-wave rally, targeting this level at $77.96 with a high of $79.25. So again, everything is a little bit mixed in oil right now. In Bitcoin, Bitcoin actually sold off last night, and the high traded of $43,844.66 remains the high for the week. And likely we will see lower prices. But right now, I think there is a possibility the market will revisit the 38,514 with the possibility of targeting much lower at 32,000. Okay, 32,000 is always a target because of this larger degree three wave, and from the high of just under 49,000. So remember, tomorrow we have non-farm payroll. It's going to be volatile. Tonight we have very little data update, so possibly tonight trading will be a continuation of the late closing on Wall Street last night. So this is all I have for you. You take care, and I come back to you tomorrow with further updates. Take care. Bye bye.